then let's move on and just talk in focus Capri. Capri is raising almost 500 crores via NCD issues, and NCD fundraise is likely to support the AUM expansion. Now, what's also very important is that gold loans are also driving sharp AUM mix shift. Asset quality is also improving despite growth surge, and cost efficiency gains support profitability. But the question in concern over here is, can ROA sustain at current levels? What could be the trajectory for OPEX ratios improving ahead with scale benefits? Let's decode all of this. We are joined by Mr. Rajesh Sharma, MD, Capri Global Capital. Mr. Sharma, hi, good morning and welcome to the show. Let's just understand the fundraising aspect, especially because we are looking at this significantly impacting the AUM growth and margins. Why issue NCDs at 9.5% when cost of fund is actually falling?
Yeah, thank you. I think you're asking a very valid question. So interest rate is 9.5 is not 9.5 for all the tenure. It ranges from 8.99% to 9.5 depending on the maturity and the tenure. So right from 2 years, the interest rate will be about 9%. And up to 10 years, when this goes for 10 years, is about 9.5%. So it varies basis the tenure. And this NCD raising, which is one of the tranche, we intend to raise about 2,000 crore rupees during the entire year. This 100 plus 400, the first tranche which we have launched, I think it will give us a diversification of the resources and also build a track record among the retail investor about the borrowing. So from that perspective, this is our second issue we have done in past. I think this is in line with the market and slightly it is attractive for retail investor. I'll agree with that.
Hi, this is Ankita also joining in. Good morning. Tell us, will the future growth really require equity dilution again?
Currently, our capital adequacy ratio is about 30%, and we have seen about 25% housing finance. And to reach AUM size of about consolidated level 55,000 crore, we are adequately capitalized. So right now, we are not looking, and rather we don't require any kind of a capital till we reach that AUM level. Plus, we have about almost 20-21% of portfolio under the co-lending arrangement with a lot of our bank partners. And I think that also makes our capital very efficiently used. With combination of this, we are good to go for almost 2 years.
Right. One clarity in terms of gold loans. Gold loans rising to almost 43%. Does this create concentration risk for you? Also, what is going to be the strategy to diversify your AUM mix better going ahead?
So gold loan increasing in the overall proposition, improve the overall composition, I would say. The gold is a asset class where the property remain in our position and is quite liquid. And the portfolio has really done well. So overall basis, gold loan is about 42% currently. In future, it can be in the range about 47-48% also. And remaining all segment, which is MSME, affordable housing, small ticket size construction finance, they will be in the range about 16 to 18% each.
Right. Mr. Sharma, also what is the normalized ROA across the cycles, not the peak, with West Asia conflict ongoing? How much of a dent is expected on the asset quality?
So I think at the moment it is too early to say, but there could be some pocket of some customer where they are impacted. But having said that, we are not in the unsecured lending. Having the collateralized secured lending, there could be some bump up for a 1 quarter or two among the specific customer who are affected. And I think because of the collateral, this should not deteriorate our credit costs significantly.
When we look at OPEX or the other assets, we've seen an improvement from almost 6.8% to 5.5%. But then what is the steady state level? If you could just talk about this trajectory or on expected lines, what should we be considering?
So if you've seen in past, we always remain in the expansion mode. Last year also, we added close to about 300 plus branches. And coming a couple of years, we intend to add more branches. So despite that, our cost income ratio have come down. It is currently about 49%, OPEX about 5.5. I think steady state basis, there is a improvement scope about 1.5% in the operating cost. OPEX level should settle at about 4% in longer run.
Right. Also, Mr. Sharma, the trends, talk to us about the trends in the MSME sector. Your percentage share is declining in that segment. Is this intentional?
So past 2 years when we were launching the gold loan branches, our whole focus was that we have to build a scale and size there. So consciously keeping the overall growth annually in the range of about 45 to 50%, we have diverted our credit line and capital towards the gold loan. And that was the reason that to make the branch more quicker break even. So if you see that our December ending result, our AUM was about 12,000 crore rupees, and per branch was almost about 14 crore rupees. And that makes every branch to become super profitable. So it was conscious decision to focus more on the gold loan because we are opening the branches and we diverted the line. We wanted to keep the overall growth in that range. So because of that, I think that was a conscious decision, while the MSME has done well as well.
All right, one last question on the guidance front, guidance for FY27 or any revision on the given earlier given guidance.
So earlier we have said by 2028 we will reach 50,000 crore. We revised it to 55,000 crore rupees because this year growth have been very good and gold have especially done very, very well for us, not only in terms of growth but also in terms of margin. So we revised our AUM guidance to 55,000 crore by FY28, and it should give us a growth CAGR about in the range about 27 to 30%.
All right, Mr. Sharma, thank you so much for joining us and weighing in all of that. We'll let you go on that note, and it's time for us to slip into a short break. Don't go anywhere.